Good day, everyone. Hello and welcome to all of you joining online. My name is Colin Kincaid, and I have the privilege of being the chair of the OECD Working Party on Financial Consumer Protection, Education and Inclusion, and also Deputy Governor at the Central Bank of Ireland. It really is a great pleasure to welcome you all to today's event. We are, of course, here to mark the launch of the OECD's report on protecting consumers from financial frauds and scams and frauds, a topic of growing urgency and global relevance. In 36 countries reporting data to the OECD, consumer losses due to financial scams and frauds totaled €10 billion in 2024 alone. This report reflects the views of 112 public authorities across the globe, underlining both the scale of this challenge and the shared determination to address it. It is an output of work undertaken by the OECD Working Party on Financial Consumer Protection, Education and Inclusion, which I am proud to share. And I'm also particularly proud to see it coming so promptly on foot of our recent Consumer Finance Risk Monitor, where we identified this area as a key area of risk. Before turning to the substance, let me just briefly walk you through today's agenda. We will begin with a keynote address from Ambassador Stephen Jones, Permanent Representative of Australia to the OECD, who will set the broader context for this discussion. And you are very, very welcome, Ambassador. This will be followed by a presentation of the report itself by Carmina de Noia, who we will know is the Director for Financial and Enterprise Affairs at the OECD, who will outline the key findings and recommendations. And we will then move to a panel discussion where we are joined by an excellent group of speakers representing a range of jurisdictions and institutions who will share their perspectives on current initiatives, challenges, and emerging risks. And we will then have some time for questions and answers. And then we will conclude with some brief closing remarks. Turning then to the report itself, which we are launching today, it has three main objectives. First, it seeks to identify the key drivers of financial scams and frauds, to support authorities in designing more effective policy and regulatory responses. Secondly, it develops a typology of financial scams and frauds, providing a structured way to classify, monitor, and analyze different types of fraud. This is critical for identifying patterns, tracking trends, and strengthening the use of data, and of course, our use of that data at a global level. And thirdly, it highlights effective approaches both in financial consumer protection and financial education to better detect, prevent, and disrupt scams. Taken together, this work aims to support a more coordinated, evidence-based, and forward-looking response to this rapidly evolving threat. As a demonstration of this commitment to coordination and collaboration, the report reflects inputs from a wide range of stakeholders and international organizations, including FinConet, the International Association of Insurance Supervisors, IOSCO, and the OECD International Network on Financial Education, INFE. The report covers perspectives from nearly 70 countries and economies across the OECD, G20, FSB, and ASEAN. With that introduction, I'm now very, very pleased to give the floor to Ambassador Stephen Jones. Ambassador, the floor is yours.
Deputy Governor, thank you so much. Mr. Chairman, thank you so much. Really great to be with you again today on this important conversation, and also delighted to be with my friend and colleague, Director Carmina, and I know his passion for this issue and the broader work that we're doing in this area. The reason I'm so excited about being here to launch this really important report today is before I came up to the OECD to be Australia's ambassador here, I spent many, many years in financial markets in Australia, including 3 years working as Australia's minister responsible for setting up our consumer protection and anti-scams framework in Australia. And I'll make some reflections upon that. But first, the context. You know, the whole trajectory of modern finance and the innovations in finance and our payment systems over the last 2 decades has been about real-time payments, anytime payments, anywhere payments. It's been about moving from checkbooks and bank branches and cash payments to peer-to-peer and B2B transactions. And the benefits of all of that has seen the speed of payments go to a point that we just couldn't have imagined 10 or 20 years ago. And at the same time, we've seen the cost of transactions come down significantly as well. And all of that is overwhelmingly good for consumers and good for business. And at the same time, the innovations in consumer product markets over the last 30 years have seen, the use of telecontact centres and remote servicing, web-enabled distribution and global marketplaces replace in large part the old bricks and mortar models of distribution. And the benefits of that have seen products and services that are available far more universally today than at any time in our lives. And that's something I reflect upon a lot as a boy who grew up in a regional town in Australia. The idea that we could have access to byproducts, let alone sell them in global marketplaces, was unimaginable. The benefit is that, these products and services and these payments are no longer bound by geography. These two forces have enabled financial crimes and scams to absolutely explode. So the upside is speed, is convenience, access to goods and services from anywhere at any time. The downside is as we're able to move money faster, we're able to lose money a lot faster as well. And in my own country, we see when my government came into power close to 5 years ago now, we were seeing scam losses double every year. They were well on their way to being in excess of $6 billion a year. And I see this report gives some excellent data on the global losses, which are in the hundreds of billions of dollars a year and absolutely growing. I was really interested as well to be a part of launching this report a few months ago. This is a report by the Global Initiative Against Transnational Organised Crime, focusing on how multinational crime outfits have got themselves into the big business of scams and financial frauds. Financial scams, frauds are now a major business unit or a major revenue earner for multinational organised crime. And this report talks about the multipliers of that and shows that it's now everywhere from small scale to large scale to university style compounds, recruiting through criminal purposes, and forced labour, people running scams into every country on earth. It's protected by, in many instances, politically, and it's absolutely associated with geopolitical instability. What all of this means is that if we do not get on top of it, the consumer harm is going to multiply and multiply every year. And behind every dollar that is lost is not just the financial loss, but there is a human tragedy, a life that is broken, somebody who is shamed because they've fallen into the trap of a criminal scammer, and they will, in many instances, never recover. We should care about that in and of itself. But alongside the consumer harm rests a threat to the very rails of modern commerce. All of those things that I talked about, real-time payments, international marketplaces, remote access arrangements, are at threat. I often ask business leaders when I do discussions such as this, how many of you run call centres? And I'll ask consumers, how many of you don't pick up a phone call when you don't recognise the phone number that is coming from? Now, just contemplate that for a moment and what it means for business models that rely on call centres, running contact and services into their customer base. If people don't trust the rails of modern commerce, they'll stop using them. And we will have to revert or convert business methodologies to far more expensive, far less efficient and far more costly mechanisms that were the part of business several decades ago. So whether you care about this because you're motivated by ensuring we have effective and efficient systems of commerce and banking and payments, or whether you care about it because you care about the consumer harm that is visited by these multinational scam or operations, then we need to be motivated to act. And because they are all operating across the boundaries of any one country, we need to act together. So this report is a really important contribution, to what we need to do. The survey of G20 plus, the collaboration with financial regulators and global financial regulators provides a really good evidence base of what is working and what is currently underway. The things that I really want to point out, and I know we're going to get more detail on this in a moment, the work on taxonomy is really important because the work on information sharing is absolutely critical. We need to share information within our countries, within our jurisdiction, between businesses, so that we can act in real time to counter the losses that are being made. But we also need to do that across countries. And unless we have a common language and a common way of sharing information, then we aren't able to communicate effectively and share information effectively. It's important within a country, it's important between countries. The work on classification and taxonomy is absolutely invaluable. I like the whole of economy joined up approach that is being advocated here: consumer education, information sharing, obligations on market participants, whether your banks, where a lot of focus is, or payment service providers. I'm very strong on ensuring that we look at the whole ecosystem of market participants, because if you lock up and put controls and concentrations in one area and leave other areas unattended, that's where the criminal activity will flow from. And we've got to ensure that we have all of the market participants acting together. And that was a part of the Australia's Beyond the Banking System approach. Can I finish on a couple of points? The scam prevention framework that we put into place in Australia legislated a whole of economy approach, information sharing, businesses taking responsibility for the conduct that was occurring on their platforms, putting in place strong new obligations, codes of practice which have the force of law, giving compensation rights to individuals when businesses don't do the right thing, establishing a national anti-scam centre as the nerve centre and coordinator for activity across the economy and across the country, giving our corporate regulator the power to take down investment scam websites, which are the generator of the majority of scam losses in Australia. All of it absolutely critical. One of those things in and of itself won't work. We need to do all of it, and we need to collaborate internationally. I want to finish on the good news, because I talked at the introduction about Australia being a country where scam losses were doubling every year. As a result of the measures that we've put into place, we have seen between 2023 and 2025 sustained drops in scam losses. They have dropped over 20% in that period. That is good news in an environment when in most countries we're seeing scam losses go up and up and up. So it's a story of hope that if we do the right things, that if we learn from best practice internationally, if we take up the examples that are being advocated in this important report and advocate for international cooperation within this area, we have hope that across all of the countries of the OECD and beyond, we'll be able to tell a similar story. Thanks so much for the opportunity to share a few thoughts with you by way of introduction.
Thank you. Thank you very much, Ambassador, for the remarks and setting the scene so well, I must say, and also just as chair of the working party, just to thank you for your commitment to this topic and for the personal support you've given us for this work, which I know has been there behind the scenes. I think you've really set out the important social and economic issues that really go to the heart of commerce, and indeed you mentioned geopolitical stability, but also nicely finishing with a message of hope that if we do the right things, we can get on top of this, and we can continue to make financial services a safe place for consumers to transact and get the benefit of all of that digitalization that you referred to, which takes me nicely to our next section, which is to hear from Carmine de Noia, who will share the key findings and recommendations from the report. Carmine, the floor is yours.
Thank you, and good morning, good evening. Okay, so and I hope the signal is okay, because I saw that it was unstable. Thank you for the introduction, Colm, and also thank you, Stephen, for joining us and your leadership on this issue, and all of you, also all the panelists, and welcome to everyone online. So I'm delighted to launch the report, so protecting consumers from financial scams and frauds today. And as Colm mentioned, this report presents analysis of data collected from over 100 public authorities from nearly 70 jurisdictions around the world, so providing a truly global perspective on a rapidly growing challenge. Okay, next slide. Yes. Now, before turning to the findings, let me underline that the OECD work in this area is firmly anchored in our international standards, and in particular, it builds on the G20 OECD Principles on Financial Consumer Protection, which is the international standard for financial consumer protection policy framework, and also the OECD recommendation on financial literacy. And Principle 10 of the Financial Consumer Protection Principles calls for protecting consumers against fraud, while the recommendation on financial literacy addresses fraud across several provisions. Now, these standards have been adopted across not only OECD, but G20 and FSB jurisdictions. Next slide. Recent evidence highlights how financial scams and frauds have become a top risk facing consumers. Now, according, and it was mentioned, to the last 2026 OECD Consumer Finance Risk Monitor, they are the leading operating environment risk and are anticipated to increase in 2026. In fact, 70% of responding jurisdictions reported to an increase between 2024 and 2025. And while estimates vary and underreporting is widespread, OECD data suggests a mean average annual consumer losses of nearly $270 million per jurisdiction. So it's an important number. And globally, losses have been estimated at around of $442 billion. Now, combating scams and frauds, including through financial literacy, is also a priority of the US G20 presidency in 2026. So it's an international issue. Now, next slide. Regarding the scale of the problem, the 2023 OECD INFE, International Survey of Adult Financial Literacy, Inclusion and Well-being, shows that around 1 in 7 adults report having fallen victim to a financial scam or fraud, and 2 in 3 victims do not reach minimum financial literacy levels. More generally, we know that levels of financial literacy are low in many countries, and this suggests that many consumers lack the knowledge and skills needed to recognize and avoid the most common scam tactics, including those highlighted in the risk monitor. And let me just remind all of you from many countries that we are about to start a new adult financial literacy survey. There is still a last call for countries to join. And also we are now planning the new PISA financial literacy assessment for kids of 15 years old. And again, these are the last days for countries to join. Next slide. Now, against this backdrop, tackling financial scams and frauds is a priority for the Working Party on Financial Consumer Protection, Education and Inclusion. And thanks, Colm, for your leadership. The report we are releasing today has 3 objectives: identify the key drivers behind the rise in financial scams and frauds, articulate a particular typology for classifying them, and third, highlight effective financial consumer protection and financial education approaches to better protect consumers. And we are grateful to the more than 100 authorities from nearly 70 countries and economies that contributed data and insights. Next slide. Our analysis identifies several key drivers behind the rise in financial scams and frauds. Now, first is digitalization. Now, while obviously it brings many benefits, the widespread adoption of mobile devices, social media, and online platforms exposes consumers to misleading and fraudulent content. Second, low digital financial literacy. Now, the rapid adoption of digital financial services has outpaced some consumers' ability to use them safely. Obviously, this is for young, but also growing population and the elder population, it has a role. And third, increasing sophistications. Fraudsters are using advanced techniques incorporating social engineering to convincingly mimic legitimate institutions. And lastly, inadequate detection systems. Without robust systems such as real-time monitoring, fraudulent transactions can go unnoticed. Next slide. So, a clear typology or classification system is essential to address these challenges. It allows for more systematic monitoring and analysis, facilitates data sharing, helps target interventions, and supports evaluation of policy effectiveness. However, nearly half of the respondents reported that they do not yet have such a system in place. Next slide. To address this gap, the report puts forward a typology based on 10 key dimensions. 6 dimensions relate to the nature of the scam or fraud itself, while 4 relate to how it is addressed. This approach enables authorities to identify patterns and clusters, generating basically an empirical evidence base. And these insights can inform more targeted consumer protection and education approaches, improve coordination across agencies, and support policy evaluation. We strongly recommend that jurisdiction without a typology adopt this framework and engage with the OECD Secretariat to discuss in more detail, and we are at your obviously disposal. Now, the report also discusses effective approaches to detect, deter, and prevent financial scams and frauds with examples from around the globe, focusing on 3 areas: financial consumer protection, financial education, and collaboration. On financial consumer protection, key measures include strong customer authentication, standards for detecting unauthorized payments, liability and redress frameworks. On financial education, 3 points: targeted awareness campaigns on key warning signs and scam types. Second, clear guidance on reporting and responding to incidents. And third, integration of fraud-related topics into national financial education strategies. And finally, collaboration is obviously critical, and which I'll speak more about in a moment. Next. So based on these findings, the report puts forward several policy recommendations. Policymakers and public authorities should strengthen robust financial consumer protection frameworks, establish a fair liability and redress mechanism to maintain trust, create a dedicated and accessible reporting channel, improve data collection, including through a typology such as one put forward in this report, enhance consumer awareness, and improve digital financial literacy. Finally, underpinning all these efforts is the need for strong collaboration, as I mentioned, across the entire anti-fraud ecosystem. Financial scams and fraud cut across sectors and borders. No single actor can address them alone. So collaboration is needed across the anti-fraud ecosystem, including the financial services industry, law enforcement bodies, payment service providers, digital platforms, telecommunications operators, and, of course, consumer representatives who can ensure that victims' perspectives inform policy design. So cross-border cooperation is particularly important given the international nature of many scams. So in closing, and the final slide, I'd like to extend sincere thanks to all participating countries for their invaluable contribution to this report. Your insights strengthen global understanding, support information sharing, and guide future work in this critical area. So I now look forward to the discussion in the panel and hearing directly from some of the financial authorities that contributes to this important work. So thank you very much, and Colm, back to you.
Thank you so much, Carmina, for that summary of a report that contains so much and setting us up for the panel discussion. As ever with the OECD, I think having that global data and global analysis is absolutely invaluable, both in supporting us in our work locally, and we're going to talk a little bit about that in the panel, but also in marshalling the global momentum behind this. This is a truly global phenomenon. You've mentioned the importance of collaboration. I'm going to talk about that in a minute as well. Collaboration cross-border, but also, as you said, and the ambassador referred to, the importance of us collaborating as financial service authorities with other law enforcement agencies and other policy providers, and having those policy recommendations now in our inboxes will be very, very welcome and very supportive of our work. So thank you to you and your team for everything that you've done in getting the report to its launch today. So now it is my great pleasure to introduce our panelists. We have an excellent panel and very privileged to be amongst them. We have Manon Bombardier, who's Deputy Commissioner from the Financial Consumer Agency of Canada, Nina Jain, who is the Chief General Manager for Consumer Education and Protection at the Reserve Bank of India, Jotaro Kaneko, Deputy Commissioner, Financial Services Agency, Japan, Nadia Linciano, Secretary General of Consob in Italy, and Kate Tuckley, Head of Department, Financial Conduct Authority in the United Kingdom. And for our online audience, please do feel free to start thinking of your questions, which we will respond to after one round of discussion. And there's facility there for you to load up those questions so we can hear what you want to ask the panel about. But I will start, if I may, with Manon, just to look at the Canadian experience and from the FCAC's perspective, and indeed drawing on your experience of advancing consumer protection and financial literacy across jurisdictions. What would you view, having read the report and heard what you've heard, as the most important enablers of cross-sector coordination in tackling fraud? And where do you see the key opportunities for us to further strengthen that alignment going forward? Manon.
Thank you very much, Colm. Very pleased to be here this morning from Canada and be part of this discussion. So from a Canadian perspective, what we're seeing is very consistent with the report. Fraud is becoming more sophisticated. It's more digital. It's operating across sectors. That includes banking, telecommunications, and digital platforms. So Canada is taking a very straightforward view on this. If fraud cuts across sectors, then our response must be as well. That means a whole of government and multi-sector approach. This thinking is at the core of our national anti-fraud strategy, which is under development, and which brings together federal partners, law enforcement, banks, and other federally regulated financial institutions, as well as the telecommunications sector and digital platforms. And it builds on an industry initiative like the Canadian Anti-Scam Coalition. So as a first step this year, the government introduced legislation that creates new requirements for banks, Canadian banks, to establish policies and procedures, also to provide consumers greater control over their accounts, and report fraud-related data to FCAC. So the government is also establishing a new financial crimes agency, which brings together expertise from law enforcement and intelligence to better address very complex financial crime and support international efforts. There's also a growing recognition in Canada of economic abuse, both as a form of financial harm, but potentially as a form of potential fraud. So in response, a new code of conduct, which will be overseen by the Financial Consumer Agency of Canada, will set expectations for financial institutions to detect, prevent, mitigate, and respond to economic abuse, those experiencing or those at risk of experiencing economic abuse. So taken together, these measures for us signal a clear direction, stronger protections, better data, and a more coordinated system-level approach. So in terms of enablers, I see three that are particularly important in the Kenyan context. First is information sharing. So in a multi-sector environment, data and insight must move very quickly across the partners, as the ambassador mentioned. And that requires a clarity around who shares what, to whom, and for what purpose. And without that clarity, there's a risk of fragmentation. There's also a risk of delays and missed opportunities for coordinated interventions to prevent harm. This becomes even more important as technologies like AI continue to evolve. So ongoing collaboration between all parties, including regulators, industry, and experts, is absolutely critical for us in building a shared understanding of emerging risks and how best to address them. The second one is consumer awareness, which is also in the report, which remains an essential part of the solution. But the goal is not simply to raise awareness. It's to provide consumers with practical, targeted support so they can recognize fraud, ask the right questions, around suspicious activities, and act before harm occurs. And we know that while fraud can affect everyone, vulnerable groups bear very disproportionate harm. So in Canada, this thinking has been informing the renewal of our national financial literacy strategy, which is coming to the end of its 5-year cycle. And we see this as a great opportunity to integrate fraud prevention within the broader financial literacy ecosystem and to align stakeholders around a common set of concrete and meaningful priorities and outcomes. But that said, we need to be very careful not to place the whole burden of protection on consumers alone. Education does matter, but it has to be backed by strong safeguards and effective protections. So in practice, this means that a consumer knows where to turn, they receive timely support, and they're not left navigating between a maze of institutions simply to understand who's responsible. Which brings me to the third enabler, which is a clear and consistent baseline of protections. When protections vary amongst products, channels, institutions, or sectors, gaps will emerge, and these gaps will be exploited because fraudsters will always look for the weakest link in the system. And when that happens, it is consumers who will bear the consequences. So consistency across sectors really matters. Consumers should be able to rely on a core set of protections, regardless of where and how they interact with the financial products or systems. And of course, this includes aligning with the international standards, such as the OECD high-level principles on financial consumer protection, including robust safeguards for consumer assets, a timely remediation, and accessible complaint mechanism. The success here means that a consumer can enter the system through any door and still receive a response that is timely, that is effective, and focused on resolving harm rather than redirecting responsibility. Because ultimately, maintaining that consistent baseline of protection is not only about protecting consumer, but really about preserving the trust and confidence in the financial system overall. So, and forums like this, and I'm very pleased to be here, allow jurisdiction to share experience, learn from one another, and continue to strengthen how we respond collectively, because fraud crosses international borders, as very well stipulated in the report. So thank you again, Colm.
Thank you so much, Manon, for that. A lovely formula there, those three enablers, information sharing, consumer awareness, and the baseline of protections that are clear and consistent. And I was delighted to hear you touch as well on what I would say is sort of fraud literacy as well as general financial literacy. That's something we've seen in our own studies here in Ireland, not to assume that a person who is very financially literate in general is both digitally and fraud literate. So I think that's a really, really good point to raise and reflected in the report as well. I might turn, Nina, to you next. We heard from the ambassador about the role that digital financial services has played in financial inclusion and how it has really brought a huge amount of really good convenience and so forth to us. And when I think of countries that have really gone on that journey, I think of India. You know, the rapid expansion of digital payments that you've had there, particularly through UPI, has brought enormous financial inclusion, but also perhaps an exposure to scams. So how has RBI and others in your jurisdiction adapted your regulatory and your outreach approach to ensure that this fast-growing ecosystem remains secure? And what have you found to be the most effective safeguards in preventing fraud in real time? Because, of course, these payments are happening so quickly, so instantly. Any reflections you have on that for us?
Thank you. Thank you very much. I'm delighted to be here on this opportunity of a great launch of this important document. And that's an important question because India's experience with the Unified Payment Interface shows that digital financial inclusion and consumer protection have to move together. In many cases, we see that the fraud is not a pure technology breach, but a social engineering fraud where the customer has been either deceived, pressurized, or impersonated into authorizing the payment. Therefore, the Reserve Bank's approach has been to preserve the ease and efficiency of the digital payments while strengthening the regulatory and the safe architecture around that. Our response, therefore, has been multi-layered. Firstly, RBI has recently strengthened the authentication framework. While we always had the additional factor of authentication for any digital payment transactions, the recent directions of 2025 have further made the framework more technology neutral and risk-based. This allows the regulated entities to look at certain risk signals, which are behavioral, device-based, contextual, and transaction level, and therefore apply stronger checks where the transaction appears to be unusual or having a higher risk. Secondly, many scams begin with phishing, fake links, lookalike websites, or impersonation of banks and public authorities. Therefore, an exclusive domain has been granted to all the Indian banks, which is the bank.in, bank.in for India, IN. This is intended to help the customers distinguish between genuine banking websites from fraudulent ones. And this is being widely advertised and publicized to all the public about utilization of this particular domain. Thirdly, RBI has focused on better fraud reporting and system-level intelligence, as we have been discussing today. In digital payments, fraud does not remain confined to one institution, and the money can move across banks and accounts very quickly. Therefore, timely reporting and sharing of fraudulent intelligence has become very critical. RBI has therefore given greater attention to the beneficiary side of frauds also. In many scams, the customer is manipulated at the front end, but the proceeds are routed through mule accounts at the back end. RBI has launched the initiative of MuleHunter.ai, which has been developed by our Innovation Hub, and the collaboration between the government-led India Cybercrime Coordination Cell and the Innovation Hub has used this mule account intelligence and suspect identifiers to move in this direction. We have also last year mandated the REs to make service and promotional calls only through specific series of numbers, which have again been publicized to the general masses, so that service calls and promotional calls only are sent through specific series of telephone numbers, mobile numbers, and they can be easily identifiable. Another recent measure has been a proposal to revise the customer protection framework for electronic banking transactions. A key shift here in these draft guidelines is that it recognizes that many digital frauds are not only simple unauthorized access cases, but they may be, though technically authenticated, they are indeed induced through deception, impersonation, coercion, or duress. The draft therefore strengthens both prevention and redress. It requires the banks to maintain robust fraud detection systems, send instant alerts, provide 24/7 reporting channels, record alerts and responses, register the fraud reports as complaints immediately, and act to prevent further loss. Another important feature of this draft is that it places the burden of proving customer liability on the bank. It also proposes a one-time compensation mechanism for bona fide victims of small value digital frauds and recognizes the beneficiary side dimension, including the role of mule accounts. This circular or these draft guidelines reflect RBI's shift towards a safe by design, accountable and fair redress framework for digital payments. In terms of the real safeguards, the most effective measures are those that act before the money moves too far. These include transaction monitoring, velocity checks, device and behavioral signals, alerts for new beneficiaries or unusual payment behavior, mule account detection, and quick freeze and recall arrangements. But these safeguards have to be designed very carefully, such as not to reduce the very convenience that made digital payments so successful in India, but also prevent fraudsters from exploiting the system. So the principle that we have gone forward is risk-based friction and not blanket friction. However, the most critical piece remains customer awareness. RBI's awareness initiative, including Safe Digital Banking Messages, RBI Says campaign, have been multimodal and multi-channel. Besides this, the bank-level awareness drives and practical fraud awareness material have been very important for creating an informed customer. In the roundup, I'd like to say that India's approach to digital fraud prevention is increasingly ecosystem-based rather than institution-based, with customer protection at the center of the framework. Thank you very much for giving this opportunity to share our experience. Thank you, Com.
Thank you so much. And thank you, Nina, for sharing that wealth of experience clearly that you have in India. That point about ecosystems, I think, is a word I'm hearing more and more in these conversations. A lovely expose there of the structure of some of these scams, the layer, the role of social engineering, which we're going to come on and talk about in a moment. And I guess that combination of practical collaboration amongst the public agencies, as well as driving the public awareness and not forgetting that what we're trying to do is ensure that we keep the benefits of digitalization for people as well. And one point that you mentioned there that really resonated with me, and it goes back a little to what Manon just said about the baseline of protections, is being clear about liability and responsibility. That's something that I know we're having to do some policing on, I will say, in terms of our own institutions here in Ireland. And I would turn, Jotaro, if I may now, to you. We've been hearing about how cross-border financial frauds and scams is, and how they will look to exploit, the fraudsters will look to exploit regulatory differences, both within a jurisdiction, but across borders as well. And I think when I think of your jurisdiction, I recall that you were one of the first jurisdictions to begin regulating crypto, for example, which has been a key vehicle for some of these activities. So from your perspective in the FSA, what do you see as the biggest challenges in tackling frauds and scams that originate outside your jurisdiction, and how can international cooperation be strengthened?
Thank you, Com, and thank you to the OECD for this important discussion. To respond to the great questions, I will cover three things: the key challenges we face, what Japan is doing about them, and why international cooperation is indispensable. Let me start with the challenges. Crypto-related scams are inherently cross-border and increasingly sophisticated. From Japan's experience, three challenges stand out. The first is unregistered offshore operators. A large number of scams involve entities located abroad that target domestic consumers through digital channels. They operate outside our regulatory perimeter, are difficult to identify, and make enforcement and asset recovery extremely challenging. The second is information asymmetry and sophisticated techniques. Crypto markets are complex, and scammers exploit that complexity. We are seeing misleading disclosures, the use of social media and influencers to create false credibility, and increasingly AI and deepfakes. As highlighted in the OECD report, financial scams are growing in both frequency and sophistication, driven by digitalization and emerging technologies. The third is regulatory arbitrage. Differences in regulatory framework across jurisdictions create opportunities for bad actors. Firms can establish themselves in lightly regulated environments while targeting consumers globally. Even strong domestic regulation cannot eliminate this risk on its own. Now let me move to Japan's response to the challenges. Japan has taken significant steps through recent legislative reforms. I will walk through 4 of them. Step 1, strengthening the legal framework. We have reclassified crypto assets under the Financial Instruments and Exchange Act, recognizing their investment-like characteristics. This enables us to apply stronger investor protection rules, including an explicit prohibition on unlawful solicitation and misleading representations, backed by enhanced penalties. Step 2. Combating unregistered operators. We have strengthened enforcement through increased criminal penalties, emergency injunctions, and enhanced legal remedies for investors. Step 3. Enhancing disclosure and market integrity. We have introduced comprehensive disclosure requirements, liability for misleading information, and rules against insider trading and market manipulation, all aimed at reducing information asymmetry. Step 4. Preventive measures. We are implementing practical safeguards such as restrictions to reduce misuse of accounts and measures to disrupt fraud schemes at an early stage. That said, we must be honest about our limits. When actors are located abroad, enforcement is difficult. Assets move quickly across jurisdictions, and cooperation mechanisms are not always fully effective. Domestic action alone is simply not enough. Lastly, I'd like to touch upon our approach for international cooperation. Let me therefore highlight 4 priorities for strengthening our collective response. First, more timely and practical information sharing, including supervisory data, not only enforcement-related information. Second, expanding cooperation beyond enforcement to include supervisory cooperation, ongoing monitoring of global firms, and mechanisms such as supervisory colleges. Third, promoting regulatory consistency. The principle of same activities, same risk, same regulation should guide our efforts to reduce regulatory fragmentation. Fourth, broadening cooperation beyond the financial sector. Scams frequently involve social media platforms, telecom networks, and other digital infrastructure. A whole-of-ecosystem approach is therefore necessary. To conclude, let me present 3 messages. First, crypto-related scams are global in nature and increasingly sophisticated. Second, Japan is strengthening its domestic frameworks through legal reforms and enhanced enforcement. Third, and most importantly, effective international cooperation is indispensable. We must make better use of existing frameworks, deepen supervisory collaboration, and work toward greater global consistency. In short, a strong domestic regulation plus practical international cooperation is the dual approach we need, and that is what forums like this one exist to advance. Thank you very much for your attention.
Thank you so much, Jotaro, for that. And I love it. I particularly liked your point there about, we've talked a lot about innovation and innovative approaches, but just the basics of making sure you have the right legal framework in your jurisdiction and you have the power and the capacity to enforce it in your own jurisdiction. And I guess if we all have strong legal frameworks and enforcement capacity in our own jurisdictions, it makes that international cooperation possible and makes it work, which I think is a really, again, really great practical outline to us. Thank you, Jotaro. I'm going to turn to you, Nadia, next, if I may. We heard earlier from Nina on the social engineering that sits at the heart of a lot of the frauds and scams and comes through in the report very strongly in the typologies. I know CONSOB has done extensive work on behavioral biases and retail investor vulnerability to these types of frauds and scams. And in the context of scams, and again, perhaps particularly in the area of crypto scams, what behavioral patterns have you seen are most exploited by fraudsters, and how should regulation and education adapt to better address them? And we got almost halfway through the panel before AI was mentioned, which is pretty good these days. But you might have a few words to say on the behavioral impacts of AI as well.
Thank you very much, Colm, and thanks to the organizers of the webinar for giving me the opportunity to share some thoughts, inspired also by the comprehensive and interesting report launched today. In the context of crypto assets and online frauds, looking at behavioral biases is important to understand why retail investors remain vulnerable to scams despite the increasing availability of information and warnings. Fraudsters have long exploited predictable cognitive and emotional biases, such as the fear of missing out, the sense of urgency and emotional pressure that lead to impulsive decisions, overconfidence, the attitude towards herding behavior, and in general, the reliance on mental shortcuts or heuristics that people use to make complex decisions. All these biases become even stronger in the digital environment, whose pace of development, as highlighted in the report, is one of the most significant drivers of financial scams and frauds. So let me recall briefly the main factors contributing to the aggravation of behavioral biases in the digital environment. First, the repeated exposure to information online. This is also mentioned by the report among the drivers stemming from the demand side. This repeated exposure creates the so-called illusory truth effect. That is, people believe, think that information is credible simply because it is encountered frequently. At the same time, algorithms exploit the so-called confirmation bias, providing information that reinforces the individual's existing beliefs while disregarding contradictory evidence. Crypto markets are often associated with narratives of extraordinary returns and rapid wealth creation, and social media and financial web communities encourage viral dissemination of these narratives. Second, online platforms where crypto assets are traded can further amplify behavioral effects through their design, using highly intuitive interfaces and gamification techniques. Third, influencers, which were recalled also by Jutaro and are extensively analyzed in the report, may contribute to the dissemination of contents that are misleading or linked to unauthorized activities, with followers often interpreting popularity, visibility, and engagement as indicators of expertise and reliability. Fourth, bad actors, and here we turn to artificial intelligence, use a lot increasingly artificial intelligence to generate fake videos of politicians, celebrities, and financial experts, persuading investors to transfer funds or invest in fraudulent crypto schemes. All these developments suggest that regulation and supervision should be behaviorally informed. Disclosure should leverage more on how people perceive financial information, for instance, to design more effective warnings or to deliver more effectively financial information. Also, financial education must evolve, and the report makes this point very clearly. Simply providing technical information is not sufficient, as individuals also need behavioral awareness. They need to be able to recognize emotional manipulation, cognitive biases, and deceptive online strategies. To this regard, experiential learning and edutainment may be effective in enabling individuals to observe their own biases in action and to learn how to mitigate them. Consob has developed edutainment initiatives on Ponzi schemes and crypto assets, as well as tools using gamification techniques. And we are now gathering evidence to check how effective they may be. At the same time, cooperation with digital platforms has become essential, as it is recommended also in the report, as it blocks fraudulent schemes, may block fraudulent schemes, may help in prevention. Consob has established a voluntary cooperation with Google. So since 2023, Google has introduced a verification mechanism for financial services advertisers in Italy, and has implemented the procedures allowing Consob to request the removal of unlawful financial content from YouTube and Google Play. Reducing the visibility of harmful content, we expect to be much more effective than intervening ex post, of course. And finally, Consob is also increasingly using the AI-based tools to strengthen supervision. We are developing systems based on large language models to analyze complaints, identify suspicious websites, and support the detection of unlawful online financial activities. I want to underline, however, that AI remains a support tool, as final assessment and supervisory decisions continue to rely on human oversight and institutional responsibility. So to conclude, the challenge posed by crypto scams and online scams in general and frauds in general is not only technological or regulatory, but is also behavioral. So in my opinion, investor protection should combine the framework in place with the behavioral insights, technological innovation, and cooperation with all the relevant stakeholders to enhance the effectiveness of the fight against frauds and scams. Thank you.
Thank you so much, Nadia. Really powerful call out to us there as regulators to really engage with this behavioral science part of the work, and actually having that then inform how we actually find supervisory and regulatory solutions to these things. You mentioned the cooperation with the platforms, which I know is live in many jurisdictions, but also what struck me as you spoke was that if the fraudsters can play on the behavioral biases and design their frauds to be successful, presumably we, working together with the platforms, can design things that actually prevent the frauds in the first place. So designing things, safety by design, as they say. Thank you so much for that and for all of that work. And finally, Kate, if I turn to you, Jotaro mentioned, as did others, legal liability and the whole question of who's liable for what. And I know in the UK, by redefining liability for scam losses, if I may put it that way, the UK is effectively requiring banks and payment firms to take a more proactive role in fraud prevention, because by getting them to be liable, then they're that more incentivized to prevent the frauds. Really, really interested to hear how that initiative, and I know there are in similar initiatives and similar positions in the landscape in the EU and elsewhere, how has it changed the incentives across the ecosystem? Do you see gaps in that regard in terms of liability outside the financial sector? Really interested in your views on how approaching this from a liability lens can change the game a little bit, perhaps.
Yeah, thank you. Thank you so much. And very, very pleased to be here today representing the UK and the Financial Conduct Authority. And thank you to the OECD and Secretariat for hosting this panel, which I'm pleased to be on. It's a great report and, of course, such a key topic. Financial crime and fighting financial crime is key and core to the Financial Conduct Authority's strategy. And our work with our partners and our international partners is key and critical to that. But of course, our authorized firms are a vital line of defense in this fight, and we expect them to be fully set up to combat it, but also, as you've said, Com, to reimburse and take liability for it when consumers are subject to that fraud. So just want to touch upon our reimbursement scheme. So we set this up in October 2024. So very much in collaboration with our payment systems regulator, brought in protections for consumers who are victims of authorized push payment fraud, called APP colloquially. So this type of fraud, of course, happens when a person is tricked into sending money to a fraudster via bank transfer, and all types of these frauds are covered critically by the protections that we brought in, including impersonation or romance scams, for example. The protections are key and include sort of comprehensively firms across the system, big or small, and the system reimburses those victims up to £85,000. Individual firms may, however, choose to reimburse more than that figure, which is key. And all of the firms, in a sense, are therefore incentivized to stop those frauds happening in the first place because of their responsibilities to pay out. And the aim of the scheme was really to ensure that consistency of consumer protection that has already been touched upon in this panel, that we think is key, and to force financial services firms to take that fraud protection seriously. Previously in our jurisdiction, it very much depended on which bank or payment service provider you went to, and it would vary the standard of protection. So we think this is obviously a key initiative for us. And then just to give you a bit of an outline as to the impact of that intervention. So at the moment, we've seen that within the first 10 months of that policy, 88% of the value of the money that was lost was returned to victims. And critically, because we understand that time is of the essence in these circumstances for those consumers, 83% of claims were closed within 5 business days, so they got their money back, which obviously is really vital as well. So the initial results of that scheme suggest that we've improved victim outcomes through that collaboration and encouraged firms to invest more in their own controls, monitoring, case handling, and governance. However, of course, you touched on the gaps, and that's really important that we sort of think about that as well, because obviously, as everyone's talked about, the scale of fraud, the amount of money that is lost to fraud is ever increasing and vast. And the scam journey, as we've said already, other panel members have touched on, often starts upstream in those digital platforms and communication channels, so that they sit outside the banking and the financial services perimeter. And that's where those victims are first targeted, and it's key and critical that we address that. And that's where victims are increasingly exploited. And so although we see that telecoms is slightly lower proportion to online, it's still a source of an important source of where these frauds germinate, and important that we work across those areas to plug those gaps. And so we've been doing a lot of work in the UK in relation to that. So Nadia touched on this as well. So we've been doing a lot of work looking at sort of addressing online harms. We have been scanning hundreds of thousands of websites every day to try and identify scams and deal with them. We issue thousands of alerts about unauthorized firms and individuals. But really importantly here, we've done a lot of work engaging with those big tech platforms, so Google, Meta, X, TikTok. And we have had some success in working with them to get them to change their policies to only permit paid for ads for financial services, and only by advertisers that are authorized by us as the financial services regulator. And we have had some real success there, which is not to say there's not more to do. And we think these platforms can do a lot more in this space, by enforcing their own policies and procedures, frankly, and looking at things like repeat offenders. They have a lot of data. We think they should be using it to more effect. And then finally, I just wanted to pause on, of course, the work we've done in the UK with international regulators, which has been amazing to see recently in terms of stopping illegal finfluencers as well, who've obviously been putting consumers' money at risk. And we've had 17 regulators worldwide that have worked with us on a week of action, which has included things like enforcement activity as well. So, those just a few thoughts from the UK and approaches that we've taken to address the scourge of fraud and prevent harm.
Thank you so much, Kate, for that. And I know each of the jurisdictions in the panel we've just heard for have been amongst the jurisdictions most active in this area. So really thank you for your work, because you're setting up a lot of examples and precedents for us. And I'm as a regulator, I'm very drawn to things that change the incentives in a system. I think that's how you drive behavior. So you've been very, very live to that. And actually, the novelty, I guess, from a supervisory perspective of a financial services regulator calling an entity that, if I understand the UK system correctly, at the time, you don't actually regulate one of the platform providers to task on their own internal policies and procedures. I think that must have been an interesting conversation with those entities, and well done you for going that route. We have a little bit of time now for some questions from the floor. There's a lot come in. I now have the task of trying to read them all extremely quickly and digest them. But there's one in particular here, which I might throw open to the panel at large, about the state of evidence on the effectiveness of consumer education interventions. This is something that I know we've all touched upon. I'm really interested if anyone in the panel has an insight into the effectiveness of consumer education interventions in this space. That's one question for you to hold in your minds. And then also the strengths and opportunities that are there for international information sharing. So I might just take those two if anyone wanted to take either the consumer education effectiveness one or the strengths and opportunities you see as regulators in the field for international information sharing. Would anyone like to jump in? Jotaro, please. And then I have Nadia. Jotaro. If you're speaking there, Jotaro, I can't hear you at the moment.
I'm so sorry. As I touched upon international cooperation during my presentation, I'd like to pick up the first one on financial education. As Nadia perfectly elaborated, well, the criminals are really skillful to exploit the psychological technique, and we are very subject to cognitive bias, especially under pressure. So, well, although we are doing our best efforts to raise awareness of those techniques, well, there should be more efforts, I believe, to bridge knowledge and skills and behavioral changes. So, well, that's the most difficult part, but well, as is defined by OECD and INFE, financial literacy consists of not only skill and knowledge, but also attitude and behavior. So, well, we regulator should push forward to educate people on their inherent tendency to be overconfidence or cognitive bias based on trust, fear, exaggerated by SNN investment fraud or romance scam. So, it is quite difficult area, but I'm rather optimistic about potential financial education can provide going forward. Thank you.
Thank you so much, Jotaro. Nadia, you want to come in on either of those points?
Yeah, thank you, Colm. Well, actually, the question on the effectiveness of financial education is key, and as Jotaro said, also the OECD is working a lot on this because regulators and all the actors engaged in financial education are increasingly aware of the importance of carrying out an impact, an ex post impact analysis. So far, we have been used to deliver technical contents. We are starting to understand the importance of behavioral components, and we are incorporating behavioral issues also in financial education. But still, we have to work more on the analysis of the ex post impact of financial education. This is particularly challenging because you can measure the impact in the short term, and it's quite easy to check on with respect to the group to whom the specific financial education initiative was delivered to. But the interesting challenge could be to follow a panel of people over time and to understand whether the financial education short-term effects, if any, last in the medium and in the long term, and this is quite difficult, of course. But let's start with analyzing the short-term impact, as we are doing also at the OECD INF, first of all. And as far as the international cooperation, of course, it is key. It was recalled many times, and also the report is very clear on that. I want just to remind an IOSCO initiative, which is also mentioned in the report. IOSCO recently launched the iScan network, the International Securities and Commodities Alerts Network. It is a global real-time database of supervisory alerts on unauthorized firms or investments. So also platform providers have the opportunity to connect to iScan and to warn against illegal investment offerings that are on their platforms. I can share with you the fact that Consob is using iScan to detect possible bad actors outreaching Italian financial consumers. So along with other detection tools, we are starting to use also iScan.
Thank you so much, Nadia. Manon, you wanted to come in there, please. You're muted there.
Sorry. Yes. So thanks. So we're working on developing interventions for fraud, but we're not quite there yet. We're working with partners to find the best tool. Several tools exist, but we don't want to build something that duplicates what already exists. But what we're finding from our research is that fraud does not affect everyone in the same way. So we know, for instance, that women and seniors are more susceptible to phishing and authorized card use, whereas men, especially young men, are more vulnerable to investment fraud. So, and we also see difference, and I think that many other regulators have seen that in the level of confidence of women and men in the financial system. So a one size fits all does not work. We really need to make sure that consumer education to be effective is really focused on who we're trying to help. So we're building that into our financial literacy right now, but treating Canadians or consumers as a single audience, we think would be a mistake. So we need to make sure we understand the challenges of the different groups to design interventions that are evidence-based and targeted and measurable. So that's what we're working on in Canada right now, and happy to share when we have some development in that area.
Fantastic. Thank you so much, Manon and others. Just a short word from me, and I know we have some other questions coming in there on the international information sharing. I think initiatives like iScan, as Nadia referred to, are fantastic. My own sense of it would be that when it comes to live investigations, the ecosystem amongst regulators is pretty healthy, and we're pretty good actually at engaging with each other to actually support a live investigation. The next layer back from that, when it comes to circulating information about suspicions of actual frauds and scams, again, I think the multilateral memorandum of understandings that are there and so forth, I find can work quite well. I think where there is a gap at the moment is in finding ways within the legal systems we all work in to share confidential supervisory information in a way that helps us all actually find some of the issues in the first place. I think a lot of us are in that sort of whack-a-mole situation a little bit at the moment, but that would just be a personal perspective of me. One of the questions that was asked in the chat was around the links with AML. And I might say a few words to that. I think that is something that is becoming increasingly important, that link. And I think we are, as the level of financial frauds and scams becomes high, and it becomes almost a crime of choice amongst the large organized criminal gangs. I think our work on anti-money laundering and indeed counter-terrorist financing is beginning to get more and more interested in this space, because of course once the money becomes the proceeds of a fraud, it is the proceeds of a crime, and we have to trace that through the system. I have one other question that is there for specifically Kate for the UK on how the reimbursement scheme works, and maybe a little bit about maybe briefly, because I know there's quite a lot of detail in that scheme, if you don't mind, Kate, but also maybe some of the challenges that you've had in engaging with the platforms and other regulators. Some of the practical challenges there. Thanks.
Sure, no problem. So just briefly on the reimbursement scheme. So that is a 50-50 split of liability between the two banks, so the sending bank and the receiving bank. So that's sort of equal. There's no sort of difference there. The liability, as I said, is 85,000 British pounds. And there is a small excess of £100, that's all, and that's comprehensive across the piece, and you can put in a claim for any amount. There's no sort of restriction on that at all. So that's the way it works. It's overseen by the regulators, working together in relation to that. And we will be doing a review, a more formal review, looking at that as well to see how it's gone. But as I said earlier, current signs are good, which is not to say that it wasn't difficult to get to that point. It's taken a huge amount of work because the liability position was obviously highly contested. But it's about really working with industry to sell those incentives for it. Frankly, reducing fraud in the first place, will mean you're paying out less at the end of the day. So that's on, hopefully answered the question in relation to the scheme. Working with the online platforms, I would say, is an ongoing process. We now do have very good links in the UK, and we work with them very closely because we're notifying constantly about ads that we want to get taken down. So we have quite a good working system there. But again, it's about, I think, constantly banging the drum, getting their attention, building up the relationships, and not being unafraid, frankly, to call the platforms out when we don't think they're doing enough. And I think we've tried very hard to do that, working with our international partners as well. So hopefully that gives you a bit of an insight into that work.
It does. Thank you so much, Kate. We have maybe just a few minutes left, and I might just take one final question for each of the speakers. We obviously have to build our own capability as organizations to deal with all this. What is the top priority in terms of building your own organization's capabilities to combat frauds and scams? Does anyone want to lay bare their own challenges, the key thing you're working on in terms of your own ability? While you're thinking about that, I know for myself, because it's a bit of recency bias to bring in a behavioral bias into the conversation, but it's what I spent my morning discussing with colleagues. I think the challenge of AI and how we're actually going to get on top of that, I think that's the one that we feel as an area where we have to work on our capabilities, both in terms of understanding the dynamics of AI, but also becoming proficient in supervising AI-delivered financial services and frauds and scams. That'd be it from me. So having jumped into the water of what I see as our own big challenges, does anyone want to? Jotaro, please. Yes, thank you.
Yeah, actually, you mentioned what I thought in this context. So, well, also in the relationship with sound use of AI, we should be fully aware of our own automation bias, which can make the so-called human in the loop ineffective. So, well, and of course, from the viewpoint of protecting financial consumers from scam and fraud, we regulators need to build up more understanding on psychology, I think. Otherwise, we will keep on regarding financial consumers to be, well, like textbook-wise rational creatures. But in the reality, our cognitive ability is not so strong. So, well, in order to ensure the fair treatment of the vulnerable people in the treatment of the criminal cases, we should understand our own psychological vulnerabilities.
Thank you, Jotaro. And then I have Nadia and Nina, and then I'm going to close it because I know there's so much we could say, but I also have to wrap us up in about 3 minutes. So Nadia, please, and then Nina.
Well, I think that the main challenge we have to face is to develop interdisciplinary approaches and competencies which help us to be flexible to a fast-changing environment. So if we wanted to be able to adapt regulation, but first of all, supervision and supervisory practices, we really need to have a comprehensive view of the interactions between the law, supervision, artificial intelligence, psychology, as Jotaro said. So this is the main challenge to be faced, I think, for our organization.
Thank you, Nadia, and a big one at that. Certainly shared by the Central Bank of Ireland. Thank you, Nina. A final word on challenges, please. Yes.
Yeah, I'll make it very quick. One of the questions was the challenge in the ecosystem, and the biggest challenge is working in silos. So from there, I draw my challenge for building capability is to work together, collaborate, and information sharing, because all these things which all of you have said about AI, supervision, supervisory capabilities, building all that, you need information sharing. So for that, one step that we've taken is forming an interministerial group where all different platforms, government, the regulators, and the regulated have come together on the same platform to work together in the whole ecosystem in a collaborated manner. I think that is where we further need to develop our capabilities, and we can work together forward. Thank you.
Thank you so much, Nina. A lovely question, I must say, to whoever asked it, to finish on how to build our own capabilities. And obviously the report that we're launching today is a key part of that. So as we come to the end of the session, and thank you all for your attention, we just take a moment to thank everyone who has contributed to this important discussion. First, my sincere thanks to Ambassador Stephen Jones for opening today's event and for his continued support of this work. By my notes, I think, Ambassador, we managed to touch on most of the topics that you flagged for us at the outset. And I would also like to thank, of course, Carmina de Noia for presenting the key findings of the report and for his leadership in advancing the OECD's work in this area. Huge appreciation, of course, to our excellent panel of speakers, to Manon, to Nina, to Jotaro, Nadia, and to Kate. Thank you so much for stepping forward to be on the panel today. I think we've all learned a huge amount from your interventions. And it has demonstrated, I think, both the complexity of the challenge and the importance of coordinated actions across jurisdictions and sectors, but also, I would say, going back to the Ambassador's opening remarks, just how practical actually a lot of the things we have to do are, and if we do them, we can make a real difference, was my takeaway. My extra special thanks has to go to the OECD team, especially to Rachel Caron, who led the development of the report, and to Matthew Susurian and Miles Larby, along with all of the colleagues and delegates who contributed to this work. And that included, of course, all of you at today's event who actually responded to the questionnaire and provided us with the input. Producing a report that reflects the views and experiences of over 100 authorities is no small achievement, and it is a testament to the strength of this collaborative effort. Looking ahead, we will maintain our strong support on protecting and empowering consumers in the face of this evolving financial scams and frauds landscape that we are facing. In terms of specific next steps, in line with its particular strengths, the Working Party on Financial Consumer Protection, Education and Inclusion will continue to build on this work and taking forward a lot of what you've heard on today's event about how we actually turn some of this into practical action as international organizations active in this space domestically and internationally. Ultimately, addressing financial scams and frauds requires sustained collaboration, adaptability, and I think innovation, but always, as I said, keeping an eye on the basics of the liability framework and our domestic rule book being fit for purpose so that we can actually support one another when the time comes in the face of these frauds. I think today's discussion really reinforces that while the challenges are growing, so too is our collective capacity to respond. And I think the report that the OECD is launching today is a fantastic tool for us now, a real roadmap for us in terms of where to take this work next. And as with all of the OECD's report, I would encourage you all, please read it, use it. There's a huge amount of good content in there. And if we learn from one another and continue to build our collective capacity, I'm sure this is another problem we can get on top of, as we have with others in the past. So thank you all for your participation today. Thanks again to our speakers and to the OECD Secretariat. And I wish the OECD well with all of the remaining steps in the launch. Thank you so much.